Cash value is one of the most talked about and one of the most misunderstood parts of life insurance. Some people make it sound like a magical savings account. Others say it's a complete waste of money. So, who's right? Honestly, neither. Because cash value isn't magic, but it also isn't meaningless. And if you're considering a permanent life insurance policy, understanding cash value could completely change the questions you ask before you buy. Backed by my years of claims expertise in this industry, I don't just think about life insurance from the perspective of buying a policy. I think about what happens years later when that policy actually has to perform. So today we're going to answer one simple question: what is cash value? And by the end of this video, you'll understand how it works, what it can do, what it can't do, and why so many people misunderstand it. Let's start with something important. Not every life insurance policy has cash value. That's one of the biggest misconceptions right off the bat. If you own a traditional term life insurance policy, there generally isn't a cash value accumulating inside the policy. You're paying primarily for the death benefit during a specific period of time. Cash value is generally associated with permanent life insurance, such as whole life and many universal life policies. So if somebody tells you they have life insurance, don't automatically assume there's cash value involved. Now, what exactly is cash value? Think of a permanent life insurance policy as having more than one component. One part provides a death benefit. Another part may accumulate cash value over time, depending on the type of policy. As you continue paying for premiums, part of the premium helps pay for the insurance itself. Another portion may go toward building cash value according to that policy structure. That cash value generally grows gradually. It usually doesn't just explode overnight, and that's one reason people become disappointed. They expect something designed to grow over decades to look impressive in only 12 months. That's not usually how it works. So, why does cash value exist? It provides flexibility. Depending on the policy, that accumulated value may eventually be used in several ways. You may be able to borrow against it. You may be able to use it to help pay premiums in certain situations. It can become part of your long-term financial planning. And some people never touch it. Others intentionally build policies designed to maximize it. It all depends on the purpose of the policy, and that's a phrase you'll hear me say often. Start with purpose, then choose the product, not the other way around. Here's another important distinction. Cash value is not the same thing as your death benefit. Let's say someone owns a permanent policy with a $250,000 death benefit. That does not automatically mean they also have $250,000 in cash value. Those are two different things. The death benefit is generally what beneficiaries receive if the insured dies while the policy is in force, subject to the policy's terms and any outstanding obligations. Cash value is the amount that accumulates inside the policy over time according to the contract. People mix those up all the time. Before we go any further, if you're enjoying this conversation, subscribe, click the notification bell, and turn on post notifications so you don't miss future videos. If you're finding value in this content, I'd appreciate it if you like this video, leave a comment, and share it with someone who's trying to understand life insurance without all the confusion. Now let's keep going. One of the biggest myths I often hear is cash value means free money. Not exactly. Let's unpack that. When people talk about using their cash value, they're often referring to taking out a policy loan. Notice the word loan. You're generally borrowing against the value that's accumulated inside the policy, and like many loans, interest is typically involved. That doesn't automatically make policy loans bad. In fact, they can be a useful feature in the right circumstances, but they're also not something you should use without understanding the consequences. Here's why. If you borrow from the policy and never repay that loan, the outstanding balance along with the accrued interest can reduce the amount ultimately paid to your beneficiaries. That's something I really want people to understand because from my claims expertise, I've seen families surprised by the amount ultimately payable. Not because the insurance company did something wrong, but because the policy owner didn't fully understand how that policy worked. That's why education matters. Now, let's talk about another misconception. People often ask, so can I just withdraw all my cash value whenever I want? The answer depends on the policy. Some policies allow withdrawals, some emphasize loans. Some have surrender charges, especially in the earlier years. Some universal life products operate differently from traditional whole life policies. That's why there isn't one universal answer to that question. But keep in mind, the contract matters, the product matters, the timing matters, and speaking of timing, cash value generally isn't something people buy for immediate access. It's typically designed as a long-term feature. If someone buys a policy today expecting to pull out a large amount next year, they're probably approaching the policy with the wrong expectation. Permanent life insurance is usually built for years, not months. Another question I hear is, can cash value replace my savings account? Usually, that's not the right way to think about it. Emergency savings, retirement accounts, brokerage accounts, and permanent insurance all serve different purposes. Cash value isn't necessarily trying to replace every other financial tool. It's one tool among many. A hammer isn't a bad screwdriver. It's simply built for a different job. Life insurance works the same exact way. So, who might actually benefit from a policy with cash value? Someone who wants permanent life insurance, someone interested in long-term planning, someone who values the flexibility certain permanent policies can provide, someone whose financial goals align with what that type of policy was designed to accomplish. But that doesn't automatically mean it's right for everyone. Some people genuinely need term insurance because their biggest concern is replacing income during their working years. Others may benefit from a combination of permanent and temporary coverage. Again, it depends. From my perspective, one of the biggest mistakes people make is buying a policy because they heard one feature on social media. They hear cash value or tax advantages or borrow from your policy without understanding the entire product. That's like buying a car because somebody told you the cup holders were nice. You need to understand the whole vehicle. Here's what I'd encourage you to ask if you're considering a permanent policy. How does the cash value grow? Is any portion guaranteed? Are there non-guaranteed projections? When can I access it? How do policy loans work? What happens if I don't repay the loan? Are there surrender charges? How does using cash value affect the death benefit? Those type of questions matter when you have a long-term policy for whole life because understanding what you own is just as important as owning it. So, what is cash value? It's not free money. It's not a scam. It's not a savings account. And it isn't something every life insurance policy includes. It's a feature available in many permanent life insurance policies that may provide long-term flexibility when you understand how it works. And that's really the theme of today's conversation. Not whether cash value is good or bad, but whether you actually understand what you're buying. Because the right policy isn't the one with the most features, it's the one that matches your goals. If this video helps simplify one of the most misunderstood concepts in life insurance, I'd love for you to subscribe, click the notification bell, like the video, leave a comment, and share it with someone who could benefit from it. If you'd like to review your current coverage, compare policy options, or schedule a consultation, you'll find those links in the description and across my other platforms. I am Jasmón Clayton. Keep pushing, stay curious, and always move forward.